Of the day, where we are talking about insurance-backed loans, and joining me is Winnie Njau, who is the General Manager, Business Development at Jubilee Allianz. Thank you so much for joining us on Business today.
Thank you.
All right, now let's get right into the conversation and look at the status of the insurance sector in Kenya as at now. From where you sit, where are we?
Well, first of all, thank you for inviting me for this session. The insurance industry, of course, plays a significant role in the economic development of this country in terms of giving security to clients and giving them confidence to invest, because then they know they have some fallback. And as we speak, if you look at the statistics of 2022, the whole insurance industry delivered a premium of about 310 billion. And out of which about 141 billion was from the life insurance policies, whereas the rest of the premium, about 169 billion, came from the general insurance policies. If you look at the industry today, of course, the industry has been growing, but not at the expected pace. Last year, we witnessed a growth of about 12.2, 12.3% over the previous year. And that gives us confidence that there's still a lot of opportunity to scale up in this industry. Again, if you look on the side of who is insured in this market, we find that the proportion of the population that actually enjoys protection from the insurance industry is a fairly small proportion. We are talking about probably the statistics available suggest approximately 2 to 2.5 million people benefit from various types of policies, whereas we leave the rest of the population totally exposed, which is another like 55 million people. So it means then we have a huge scope to scale up. As an industry, there's a lot of work, innovation work that needs to be done to see how to make it more inclusive and reach out to the uninsured masses in the economy.
All right. Yeah. And speaking about innovations, when you look at the innovations within the sector, the insurance sector, what are some of the gains that these innovations have brought about? When you look at, in terms of the way things were usually done and now where we are, what are the gains? Well,
innovation has had massive benefits to the industry. And I'll go, first of all, to the motor insurance, which is one of our key topics today.
Yes.
Back before COVID, that's up to late 2019.
Yes.
We used to deliver physical certificates to customers. So you had to literally print a serialized certificate and deliver it to the customer. And that made the operation extremely inconvenient, as well as very not cost effective, because you had to get someone to actually deliver the physical certificate. It also meant that the intermediaries in the industry had to send someone to the insurance company to procure the certificate. Now, what has digitization done? Just on the eve of COVID, interestingly, the insurance industry concluded the digitization of motor certificates. And it was quite timely, because it was concluded just before COVID set in. And therefore, from early 2020, as an industry, we are able to issue digital motor insurance certificates. And that makes it very convenient for everyone, because it means an intermediary sitting at home or sitting in their office, wherever they are in the country, can purchase an insurance certificate for their client, or even the client can purchase directly from any insurance company, and this is delivered digitally through SMS or even through WhatsApp or through the email, and that has made the cost of distribution of motor very, very effective. There are many other areas that I think we need to digitize, particularly areas like marine insurance, where we still are not able to offer digitized certificates. And I think there are efforts going on in the industry through the Association of Kenyan Insurance insurers to make this a reality, whereby we are able to deliver marine insurance through a digital platform, so that the customer or the clearing agent or whoever requires that service is able to procure from wherever they are. And as we go on, of course, there are many other opportunities. We have seen many underwriters going into the portal where they are able to offer many insurance products through the portal. At Jubilee Alliance, we have developed a digital portal where we are able to offer a range of retail insurance products. And our aim is to ultimately be able to put all our retail and SME products into that platform, so that any client or any of our intermediaries is able to purchase end-to-end, the product end-to-end, get the certificate, get the policy document, be able to pay, get the receipt, and everything from that portal. Is already happening at about 3 products. We are able to offer the travel insurance, and we are also able to offer the various motor insurances, and even the home insurance through that portal today. And we continue expanding its its benefits and functions, so that it's able to serve our customers more effectively.
All right, very well explained. Now, let's also still stick to the motor insurance and look at even how the performance is, and how even after COVID, what has been the growth within the motor insurance.
Well, motor happens to be the leading class in the general insurance space. If you look at the 2022 IRA statistics, we did about 47 billion worth of premium in motor insurance, which is significant considering the overall premium by the general insurance companies was about 169 billion. That's a big proportion. That's almost that is something that maybe going to 40% of the overall general insurance premium that was done in the Kenyan market. And of course, there's still scope to expand that, because you find there are still many clients who are not able to afford comprehensive insurance for various reasons, either financial reasons or the fact that they are not able to pay for this insurance at a go. And therefore, as an industry, what we've done is there has been a lot of initiative, partnerships with banks which facilitate the customers to pay their premium through installments, so that they are able to pay that premium over the year. But there are still very many clients who have actually of late been downgrading their insurance to that party only, which leaves them quite exposed, because it means the asset is not covered. They are only taking care of that parties. I also believe now with the digitization of the motor insurance, we have been able to curb a lot of the fraudulent practices that were previously witnessed in the industry, where some people would be able to offer some certificates that were actually not real certificates from insurance companies. Because today, when, for instance, a security officer stops a motorist on the road, they are able to check whether the certificate that is displayed on the windscreen is from the insurance industry, is issued through WAKI, or it's a fraudulent one. So the digitization has really curbed the use of fraudulent certificates. And of course, that has been a benefit to the insurance industry, and has also contributed to the growth we see in the motor insurance space.
Right, and also let's look at claim payments. Unwillingness to pay the claims, because as you've spoken about, there are people who are downgrading the system. So unwillingness to pay the claims, what is the effect of this?
Unwillingness to pay the premium or the claim?
To pay the premium. What is the effect of this?
That definitely has a big impact on the insurance industry. I'll start from the performance of the motor portfolio of the insurance industry. The motor portfolio has continued hitting the financials of the whole insurance industry very adversely. Most insurance companies still make underwriting losses from motor insurance, and I think the undercutting in premium rating by some of the players in the sector have not helped the situation. That means that a lot of insurance companies are not collecting adequate premium to cater for all the claims. So basically, the claims are more than the premium that the industry is collecting. And so when we have more clients possibly downgrading their covers to that party only, that means that is only worsening the situation, because it means you have less and less premium to pay the recurring claims. The other side, you also find that with the what I would call the weakening of of course, the deteriorating performance of the global economy and the weakening of the Kenyan shillings against the foreign currencies like the US dollars, and you find that we are spending more money in the repair costs because the cost of most of the parts have really gone up, and so today maybe a repair of a minor incident which would previously cost us 100,000 or 150,000, sometimes you are spending double that. And of course that goes again to impact the performance of the motor portfolio. And this means that ultimately as an industry, then we have to come up with methodologies that ensure that everyone is charging the correct premium. And that has started, I think the last 2 years we've seen a lot of efforts towards harmonizing the ratings, price rating, the rating structure for motor insurance in the industry. Yes.
And also the motor insurance, when we look at the eligibility for you to be covered, what makes it for someone not to be covered, even if they have the insurance? And how does it play about when it comes to now, I come with my car, and then it's like, okay, we cannot do that. So just explain to us so that at least a person who's watching can understand what really goes down.
First of all, let me say that according to the regulations of the country, that party motor insurance is mandatory. So whether you have an expensive car or a cheap car, everyone must have motor insurance to secure the third party that they interact with, that they drive on our roads. But when it comes to comprehensive insurance, of course, there are parameters that we look at. And for us as an insurance company, for instance, we will be able to accommodate vehicles that are up to 15 years old. Vehicles beyond 15 years old, majority of us in the industry are not able to offer comprehensive insurance. And one of the key reasons is because as the vehicles become older, it becomes more and more difficult to source parts, for repair of the vehicles. And also it becomes, of course, it becomes more difficult to even evaluate the value of that vehicle vis-a-vis maybe the premium the customer would be paying. And therefore, for many customers, they also find it expensive because the minimum premium tends then sometimes to work against the customer. So if you come to us with a vehicle is 15 years old or a vehicle which is poorly maintained, and we do a valuation because we do an assessment of each vehicle before it comes into our books, and we find that that vehicle is not properly maintained, we may not be able to offer you comprehensive insurance, but we can offer you that party only insurance, which is mandatory according to our laws.
All right.
Yes.
All right, thank you so much. We're going to go for a short break. We'll be back with Winnie Njao as we speak about the insurance-backed loans and also the car insurance, so that you may understand what you need to do in order for you to just get some help when you have a problem. All right, we're going to go for a short break, but we'll be back with more.